Good afternoon, everybody.
Good afternoon.
How's it hanging?
Mr. Oldensmith.
Is anybody out there? Is there anybody out there? I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure here is, I guess, pretty much the same. Had a few day trades, but I got into and out of some of those positions intraday, so didn't keep anything new. I traded AMD a little bit, some TQQ, even traded the Dow a little bit, DIA. I never trade that. Just a couple small trades. All right, so let's jump in. It's kind of the second trading session in a row where I'll be honest, there's not really too much new to discuss. It was a pretty flat day. SPYs closed basically unchanged, up 0.08%. I think actually even a little bit less than that. I think we just upticked a little bit from where we closed. Qs are exactly flat right now. The IWM's down 0.9%. TLT's green. Gold is green. The dollar's flat. Bitcoin notable. Bitcoin down 1%. Ethereum down 0.5%. It's actually less than I thought. I thought those numbers were going to be worse. Solana's down 2%. Yeah, so there's nothing really to update here. I think as far as the technicals go, it's pretty much the same story as where we were yesterday. We had a little bit of early weakness in the trading session. We had a gap up, a little bit of a grind down. In some ways, it was pretty similar to yesterday, especially if you look at the Qs. Like the Qs yesterday kind of were in this grind lower on the ADMA for the beginning portion of the day before flattening out and rounding up. It was a little bit similar to that today with the SPYs, to some degree the Qs. Gap up, kind of grind lower here. Between 11 and 12, we based out. We turned up a little bit into the close. The Qs had the most notable kind of, we used to call this a gap and crap. Gap up, just immediately trade right back down with some opening relative weakness. But that relative weakness really didn't last, and the IWM was relatively strong. I guess one thing that's a bit notable about the price action today, when you compare the Qs and the IWM, is we had that thing going on today, again, where the IWM and the Qs, in as small of a time frame as a 5-minute bar, were trading literally opposite of each other. So it just shows you that that dispersion is still in place with this market. But by the end of the day, everything kind of ended up doing nothing. So beginning of the day, IWM and Qs were trading almost opposite of each other. By the end of the day, everything kind of flattened out. We closed pretty flat, and everything was kind of, trading together and really doing nothing. But when you turn it over to the big picture of the technicals, it's relatively unchanged here. These SPYs look pretty bullish. They're above 680. They're above 674. They're above last week's low. The Qs are maybe not quite as bullish. I'd like to see these Qs start to really establish themselves above 625. So that opening relative weakness does not have this daily chart of the Qs looking quite as good. But I can't say that it looks bad or that it looks bearish. And the IWM is pretty range bound and neutral here. So we'll see if this upside grind into the end of the year lasts. I was a little bit behind on reading the latest Scott Rubner note. I think it came out on Monday, and I really only read it this morning. But this is one of the analysts that you really want to just make sure that you're reading. And unlike a lot of the research notes where you kind of have to pay for it or be a customer or know someone who's a customer, this one, they just put it right on their website. So all you got to do is Google search it and you see the note when they come out. But I love when a really respected mind in the space, such as Scott Rubner, when they publish a note that mimics my thought process, but I had that thought process before I saw the note. So it's not like I'm seeing the note and then it's like influencing my thought process. And that's not necessarily a bad thing either, by the way, because you can just be, reading the thesis here and having that influence your thought process and learning. That's a good thing. But for me, it's like extra conviction if I'm thinking a certain thought process and then I read a note from a Charlie McGilligan or a Scott Rubner, and they have pretty much the exact same thought process. It just really further confirms that I'm looking at the right stuff and I'm thinking about the right things. And I just want to highlight like the beginning portion, the beginning summary here of Rubner's note, because it's it's pretty much exactly where I'm at. It talks about here how sentiment, and I think it means more from an institutional perspective, is very cautious, despite recent market resilience. The tone last week was deeply bearish, reflecting the growing wall of worry that continues to define late 2025. Pause there for a second. I've really highlighted what I have been describing as the 4.5 points on the why behind why the market should go down. I've identified those 4.5 points as basically, let's just at this point call it broadly the U.S. government situation, the strength of the dollar, the increasingly hawkish Fed, the 0.5 point I've been giving to crypto's weakness to see if that works its way into the broader U.S. market at any point, because everything's becoming more correlated in terms of margin calls and stuff like that. Crypto's been trading terribly, and the most important one is the AI situation. Rubner's note here actually gets into even more points than I have. In fact, really defining the entirety of the wall of worry, and it's a lot of the same stuff. It's the government, it's the AI capex mania and credit undercurrent. Which to me that's the biggest one right now. It's the stretched valuations, right? The market right now, by multiple metrics, is very expensive compared to history. It's that the Fed is still leaning a bit more hawkish. It's the repo market and the liquidity situation. We haven't actually spent as much time talking about that, but it's kind of a known situation where these banks have had to tap the repo market in a little bit more detail. It's some of the election stuff and the sentiment around it. It's the crypto deleveraging that I've been talking about, though Rubner here says that they're expecting basically 10% upside in Bitcoin from here in the short run. It's the private credit stuff that a lot of you guys in the virtual trading floor have been talking about very consistently in the mornings. We're seeing a lot of things not going great. It's the breadth, right? Market breadth. We've talked about the poor market breadth. The K-shaped economy. I've been talking about this as well. I haven't really been using that specific term K-shaped, but it is the right term of just how we're seeing whatever it is, the top 10% of Americans doing 50% of the spending at this point, and everybody else seems to, I keep describing that the real economy, basically people who don't have access to a lot of money in the stock market, is all doing really poorly right now. But the people who have exposure to the stock market, they're holding up the entirety of the economy because of a wealth effect, the wealth effect being really key and really important right now, I think, to the entire economy, of just everyone sees that their 401k and their brokerage account is at an all-time high, so they're more apt to do more spending. But if you got, in my opinion, if you get rid of that, and the way that you get rid of that is because of the AI situation, or possibly maybe the employment situation. But if the stock market were to start to drop, either because of the employment situation, which is continuing to deteriorate, or because they just start getting sick of this AI mania, then this K-shaped economy, you start to lose those heavier spenders in that wealth effect. So this is all the wall of worry, right? It's even more in depth than the 4.5 points that I've been describing. But the market should go up, because what matters is the flow of funds. And when you read through the rest of this note here, circling back to the beginning of Rubner's note here, I highlight these concerns and how they contrast with increasingly constructive year-end technicals, right? Despite skepticism, clients continue to lean into weakness rather than fade it, adding exposure on every bout of a market pullback. And there's another piece of the note in here somewhere that basically talks about how institutional money hates the stock market right now, but keeps having to buy calls because they have that fear of underperforming. And they're being forced to buy a market that they don't even necessarily like, just because, well, we've talked about this in the past as well, right? When you think about a hedge fund, the number one incentive of a hedge fund is not to make their clients money. That's their secondary goal. Their primary goal is to maintain and continue to raise assets. The best way to do that, obviously, is by having good performance. But that forces them to sometimes take these more perverse positions that they might not want to theoretically take, or do window dressing into the end of the quarter or into the year or what have you, is that they had certain positions on to maintain those AUM. So, you got this wall of worry here, but it doesn't matter until it matters. And like we spent so much time talking about in the past, what matters is kind of the opportunity for the when the market can actually go down. And we're just in a spot right now where it's really difficult for that to happen when you think about the flow of funds. We started this week off and ended last week with a really strong vol control rebid. So vol control and systematics are actually getting back involved from when they unwound in October. And you've got just the buyback buying $7-8 billion of stock a day right now. It's a huge number. And you get this like kind of I forget what the word is that I'm looking for, but basically into an up year when the market's already up into the end of the year. The last couple months tend to be really good, because come January you basically get access to kind of all of this additional capital because the assets that you have are already worth more, and people kind of front run that in the November and December period. So it's just so hard to be short from a flow of funds perspective at this point into the end of the year, with where we're coming from and those buying that's forced into the market. But that wall of worry exists, and I do think at a certain point matters. It's just all of those points in Rubner's note on the why you should be bearish, none of those are a timing mechanism. Technical analysis is a timing mechanism. Or even to some degree, understanding when you can trigger certain flows can enable you to have a little bit of a timing mechanism. But me just saying, hey, the market's expensive, that's not a timing mechanism. It's something that you take note of, that if we were to start to go down, if we can trigger things, it can help to pile on the fact that we're expensive, or that it makes the risk reward not good to the upside. But I think that you need to kind of get more people back into the pool, and at the same time lose some of these positive flow dynamics in order for all of those negative points to actually matter to this market. So I don't think it's an if, I think it's a when, and I don't think that the when is right now. I think that we can stay strong into the end of the year, unless NVIDIA really disappoints or there's some AI blow up that I'm not seeing, because again, AI I think is probably the biggest factor. Maybe that plus employment are the biggest factors of that wall of worry that actually could act as like the event that can bring us down. So it's not impossible for something to trigger us here in November, December. But barring like a nasty surprise from NVIDIA to the downside or something like that, we most likely just kind of continue to grind up and work our way up into the end of the year. And then the timing on when that stuff can matter can be when the corporate buyback bid isn't there anymore, or the new money flows aren't there anymore. And that I still think probably at this point is becoming more of a mid-January story, unless we have a real event that triggers us otherwise. So I'm trying to balance in my head, like I've been talking about here, from a team perspective. When I read some of the stuff that's going on with OpenAI and how Scam Altman's interview went, recently, that I was talking about yesterday, where he basically refused to answer the CapEx and the commitment question based on the amount of revenue that OpenAI currently has. When I look at some of this stuff, it really, really wants me to be max short. When I'm looking at the employment situation that's ongoing right now here in the U.S., it makes me really want to like be just massively short this market. But at the same time, I just don't think that the timing is right on that. So the way I'm trying to position myself right now is honestly hit some singles and doubles each day with some smaller time frame day trades. And I was able to do that a little bit with TQQQ and AMD and the Dow trades that I put on today. I had some other good day trades yesterday. So back to just kind of hitting some singles and doubles right now while maintaining, I would say, generally lighter overall swing positioning. And at the same time, trying to be long the things that I think can be winners and short the things that I think are going to continue to be losers, even in the face of everything else. I could tell you, as I talk about the $8 billion a day buyback bid, QBTS doesn't have a buyback. RGTI doesn't have a buyback. I almost giggle even saying those words, right? Because they don't even have earnings, they don't even have revenue, let alone having a buyback. So continuing to push these weak charts, these broken charts to the short side. I don't know if anybody caught when I was speaking with Mike Camo and JR recently today. I might have even said it a little bit in the morning meeting, but I'm kind of proud of myself because I've been trading for 15 years and I'm still improving and still learning in some ways as a trader. And one of the things that I'm doing a really good job with the RGTIs of the world right now compared to me more traditionally is more traditionally I might catch this parabolic short. I might be short from these mid 50s and catch a really nice move to the mid 40s, even the low 40s, and then I'm out and I'm done with it forever. And then I look back 2 months later, 3 months later, 5 months later, and the stock is all the way back down at $8-10. And this time instead, I've really been focused on actually following a game plan where I'm definitely covering on the way down, but also strategically adding almost these new trades, these deeper game plans as the trade is working, as the wedges build out, as the wedges break down, as support levels break down, continuing to add as the charts are staying bad to push them, for further downside. So when I first shorted RGTI, I think my target was like 42 to 44, or so, I don't exactly remember, something like that. And now I've been able to add and continue where my current target on RGTI is 25, and I've been able to ride this the entire way down. And I still wonder if I'm actually not being aggressive enough. But other names that are out there, like a Google, I have interest in owning this name, even though I don't have a position in it currently. I'm not afraid to buy dips in some of these stocks or call out long trades in some of these names as well for that end of the year melt up. So trying to own what's strong and what deserves to be strong, while trying to be short what's weak and what deserves to be weak, while staying nimble and kind of getting through this end of the year here, where I expect us to be strong into the end of the year, but I don't necessarily expect us to be like 2023, where we just had that massive November, December. I don't expect this to repeat this year with that degree of kind of upside momentum. I'm kind of expecting more of a grind where we probably make new all-time highs again sometime now between the end of the year. I don't think it's a big call. We're already very close, but maybe we end up finishing positive anywhere from 3 to 6% higher from where we currently are, by the end of the year. I think is reasonable, but I'm not necessarily expecting anything crazy to the upside either. But respecting that and not fighting the technicals, not fighting the trend, and not fighting the flow of funds, and saying, hey, if that wall of worry, if how expensive the stock market is, the AI trade, the higher dollar, some of the liquidity concerns, if any of that is actually going to come to light and impact this market, it needs to do that where it coincides with potential outflows from this market. And we're just not there right now, right here. So, that's just kind of a recap and just a review of probably the same stuff we've spoken about the last couple days in a row, but doing it within the confines of the recent Rubner note, because he's the man, and it's awesome to see that his thought process kind of aligns with what our thought process is. And obviously we take things day by day, and we always adjust, and we can be flexible as new information and data presents itself. But it's pretty much all I got. Again, from a day trading perspective, really just a couple singles and doubles. Nothing special. AMD had that news. I shorted a little bit of AMD for a small trade, kind of right in this area up here. I was fully out of the position by the time I got to this midpoint between the 8 and 21 EMA as a little bit of a trade. I shorted TQQQ a couple times today. One time pre-market, covered that into the first down move, into the gap fill. But then I put a new trade on in this thing as it was weakening out into this area a little bit. Made a couple dollars on that trade, got fully out of it by 110. Again, just some singles and doubles. I put on a little bit of a Dow trade at a certain point as well, just because this was like a day 4 to the upside here with some notable strength. But honestly, just took that as a day trade. Made a couple dollars on it, got out of the way, and nothing was really happening from it. And that's it. Pretty much defines my day. It looks like we've got Cisco trading higher on its report. So that's all I got. Again, I don't think that there's too much in terms of updates, but I'm not in a rush. And Josh said you guys should ask questions. So if you guys have questions, I'm not afraid to work unlike some of us. So I'm happy to answer them, but I'm also happy to not if if no one's got anything, because it was another quiet day. Up to you guys. I just got filled on the bid for some OKLO. OKLO is down $1 here after hours. Formula 1472 in the YouTube says crypto makes me want to KMS. I don't know what that means. KMS. I'm not hip to all the acronyms that the kids use these days. I don't know what KMS means. It's not good. It's one that I'll it's one that I'll get in trouble if I oh, got you. Yeah, that's not a good one. I now know what you're trying to say. I mean, look, you got to respect the technicals. The technicals on crypto is very broken right now. My own trading, like I have a very adamant belief that only price pays, and that some of these age-old adages of wisdom, like in the short run the market is a voting machine, but in the long run it's a weighing machine. I believe in that. So therefore, what I think is only price pays, and price is the technicals on these smaller time frames to take advantage of the voting machine. But the weighing machine is the bigger picture, and that's the fundamentals. I still can't get anybody to make a real fundamental case for me for crypto that I'm able to believe in. I'm sorry. So Aswath Damodaran, if I'm saying his name correctly, who is he's an NYU professor. He's like a guru as far as fundamentals go, and he has a research note. I'm on his email list that you guys can sign up for. He recently had a post about gold, and I am I'm not I love reading his stuff. It's great, and I'm not a big gold trader, so honestly I wasn't overly interested in the post, but it was still, anything he writes, if you read it, you're going to learn from it. So I read about half of it, and then I just got interrupted, and then I honestly forgot to go back to it. But it was interesting about how he was trying to define, and I'm going to butcher this, so I wish I had it in front of me. Maybe I can find it in my email, and then I can just actually quote it properly. Man, I don't know if I'm going to be able to find it quick enough. Because I also can't spell his name because I'm a terrible speller. There it is, Aswath Damodaran. That's how it's done phonetically. Can I find his? Does anyone read his stuff or listen to his stuff? Because it's stuff that you definitely want to be paying attention to. It's really good. Ryan does. Awesome. Is this it? Musing on Markets? Yeah. If you just Google search him, Musings on Markets, that is his blog. And you can register for it so you can get an email when it comes in. And look again, there's Ryan in the VTF posting it for everybody. Again, we tend as traders to be a little bit more shorter term and a little bit more technically focused, but first of all, everyone here needs to do their best to always be learning, and I'm still working on learning and improving myself after having done this for a long time. And I'm not a commodity trader. I took a trade in gold recently, and it was a good trade, lost some technicals, but I'm really not a commodity trader. But still worth reading. And so this was the interesting part, right? He basically is saying here that all investments can be classified into one of four groups: assets, commodities, currencies, or collectibles. Assets have expected cash flows, either contractual, which is fixed income, or residual, which is basically equity. Commodities, they derive their value from use as inputs into production or other products or services. Currencies, which are used as mediums of exchange and stores of value. And collectibles, held for their scarcity and enduring demand. So when he goes into gold, if you read through the blog here, it kind of describes, the first question is, what is gold? Is it an asset? Is it a commodity? Is it a currency? Is it a collectible? And it's a little bit interesting and unique because it takes on certain characteristics of multiple of those four what's the word I'm looking for? Groups, basically. And at one point in here, he mentions Bitcoin in what I read, and like what that is perceived as, right? And that still is the big issue to me on most of this crypto stuff. I don't think it can be an asset based on this definition because there's no real expected cash flows. And yes, I know for the hardcore crypto guys that are out there, I know that there are certain ways now where you can stake your crypto and potentially be able to get cash flows, but let's just try to keep it simple for the moment. It's not contractual cash flow. I guess in that case it would be, but not like how a bond is. And it's certainly not an equity where you're getting, residuals from the performance of the company. It hasn't been able to act as a good currency because the volatility has been too big, and the ease of transaction I still think hasn't been there. And yes, I know you could probably find a pizza place on Long Island that's going to accept your crypto, but generally speaking, I can't go and buy a bunch of stuff with fart coin, right? It doesn't work. So is it a collectible? Is it a commodity? It doesn't seem like it's a commodity. The point is, I still can't come up with the use case for most of this stuff. I have seen aspects of Bitcoin act as digital gold. And that's the most that I can say honestly about the entirety of the crypto space. And that's why I struggle to be a believer in the space. And it's always why, by the way, I've loved trading stocks more than anything else. More than, being a commodity trader or anything else, is because I've always been fascinated ever since I was a little kid about this concept of, hey, if I go and I buy a pair of Nike sneakers, that benefited the company Nike. They just made a little bit of money off that purchase. But I can also actually be an owner of the company by buying the stock. That makes me an owner. And then when I go and buy those Nike sneakers, or my friend goes and buys those Nike sneakers, I'm actually getting a piece of that. When I go and buy an iPhone, I get a piece of that because I'm an Apple shareholder. It's the same thing. That is what has always fascinated me about markets. That's why I want to own those things. And it's why I'm not really a commodity guy outside of a trade, and I'm not a crypto guy outside of a trade. But I just can't get myself to believe in the big picture of this stuff as kind of a general rule. I really do think that all of it is a house of cards unless somebody can actually prove to me or make, and as you guys know, if anybody's been with me for a while, I'm also very, very open to changing my mind and being flexible. I'm wrong about stuff all the time. I think if you're a trader, you have to be able to be open-minded about the fact that you're going to be wrong and change your mind because of how often we have failed trades and the need to be able to manage risk and the need to be able to stop yourself out. So if anything, I've actually become more of a Bitcoin believer over the course of the last year because I have seen over the course of the last year aspects of it occasionally acting like digital gold. And the fact that there is a limited supply to it is something that does attract me to it. That there's only going to be a finite amount of Bitcoin. That part I get, and I do derive some degree of value from it. And maybe I'm just not enough of a crypto expert to understand then where the value is coming from any of these other ones. Yeah, I get it. Ethereum can be the reason why NFTs exist, but you can't get me to understand why NFTs are actually an important structural thing for anybody, honestly. It just doesn't make sense to me, and obviously that's what I was saying when NFTs were hot, and I think time has proven me right. Outside of a very, very few super rare ones, the NFT market that tried to come around has completely imploded and they're all worthless. And I think I just don't know what else. And people try to say to me like the XRP and some of these are going to enable certain things in banking to come around. It also just circles back, even when you say that to me about an XRP, that what makes that the winner, though, like similar to why I'm bearish on an RGTI. Yeah, maybe it works. Maybe I'm proven wrong on it. Maybe the use case really comes together. But I just have a feeling that the banks are too smart, right? And if there's going to be a way for these like immediate international transactions to take place, the banks are going to find a way to be able to do it on their terms, not on the terms that are imposed to them. So again, I don't mean to necessarily go on a whole rant. I just kind of thought it was interesting the commentary that was there as we look at the charts of crypto, especially after I had just read that recent Aswath blog, which again, check it out, learn from it. It's really awesome. But I'm not saying to not be long Bitcoin. I'm just saying when you are long anything, understand what you're long and respect the technicals of it. I'm not afraid to be long something that I think is worthless. I've done it many, many, many times. I just prefer to be long something, and I'm not necessarily saying that Bitcoin or any of the cryptos are worthless. I'm just saying that I am not afraid to be long something that even if it is set to be worthless, potentially, and I'm not afraid to be long something that I believe in even more so. That's where I'm going to have the real conviction, is if I understand that both the voting machine and the weighing machine are in my favor in the way that my mind reads it, is when I'm going to be able to make the most amount of money. So yeah, I guess that's just my thought process. We don't have a lot to talk about today, so just probably giving you more than you bargained for with your comment on the crypto charts, but whatever. I hope it helps. Can't ignore staking, though, exposure to a risk asset that pays 3 to 5%. I don't know enough about it. So that was what I briefly mentioned that I'm going to put to the side on when we think about crypto as a asset. Like very clearly a fixed income asset is an asset that pays you a certain percentage. I'm just going to go ahead and say I don't have enough knowledge. I'm ignorant to some degree about staking and the risks involved in it and the reward potential. I don't have enough information to be able to give you an educated response, and whether or not I think that there are major risks there that can implode where I really don't like it, or that I think that this thing is great. I just haven't done enough research. I would say though that again, I don't have a lot of knowledge, but I know that there was one of these crypto exchanges or whatever that another podcast I listen to. I don't listen to it as much as I used to. Is the Animal Spirits podcast a little bit? and I kind of think it fell off, honestly. So I've been listening to it less than I used to. But those guys, a couple years back, they had some crypto guy on who was hawking his exchange or whatever and the staking that you can do on it, and they had him on that station, and then the entire thing imploded, and that company went to zero, and everyone that had their cryptocurrencies on it for staking lost all their money. So I don't know if that's just a one-off risk on that particular circumstance. I don't even remember the name of the exchange or whatever that it was there, but I can tell you that those people certainly incurred some real risk because everything that they had went to nothing. So I just don't know enough about it to give you an educated response. From Formula One, I get your point, but do you have a take on why it trades so terribly this cycle? Yeah, so I mean, compared to last cycles, you have so much institutional adoption with the ETFs, etc. It's total aids price action. Yeah, so I do. So honestly, one of the bigger bull cases that I think that you can make on crypto is that it has become so institutionalized. Yet perversely, the reason why crypto came about to begin with was to get away from the institutions, right? But yet the fact that the institutions have adopted it are like the biggest reason why I would argue that it's here to stay is because if you look at like a BlackRock, they've just got, too much money at stake to let things go to zero. I say that as one of their private credit bets. That was, how much did they just lose on that was in the VTF pre-market this morning? I don't remember, but it's not impossible for an asset that BlackRock owns to go to zero, I guess is the point based on what we just saw in the private credit market this morning in the VTF. So circling back to your question on the weakness in crypto, the question that I would almost ask as a rebuttal question is, my surprise isn't that crypto is this weak. My surprise is that crypto is this weak with the market this strong. And I think that still circles back to market structure. I think that there are things in the equity market that enable the equity market to maintain a bid and continue to go up that do not exist in crypto markets and in foreign markets, even foreign equity markets. You don't have the buyback in Bitcoin. Like, what is holding the market up in October and November in the face of the wall of worry? All those points that we just went through, my 4.5 points, all the points that Scott Rubner just brought up, what is holding the market up? Why is the market not crumbling under the terrible employment situation, the stagflation situation, the U.S. government disaster that we're going through, the AI bubble, holes in that bubble that are starting to present themselves? Why is the entire market not imploding as a result of all of the walls of worry? It's because there's positive gamma in the market. It's because there's a corporate buyback in the market. It's because, like Rich just said, the flows haven't changed and the flows are still strong. But those flows don't exist in crypto. There's no corporate buyback here. I don't know. I assume that there's an options market, but I would assume that options market pales in comparison on size compared to the equity market. I don't know. I would assume that you do not have, at least not to the same degree and the same size, vol control funds and CTA trend following systematics like you have on the equity market, especially because we know a lot of that money stems from the insurance companies. And I don't think that the insurance companies or the pensions are having, anywhere near the exposure into crypto that they're having to the equity market. Maybe maybe the answer is none. Maybe it's a very, very, very small percentage at this point. So the flows haven't changed in the equity market that can enable the equity market to display the wall of worry that we were discussing. The crypto market, I think, is actually showing it to you much more loudly and much more clearly. You lost your job. You got furloughed by the U.S. government. You're not getting a paycheck from the government shutdown. You need to raise money. You're selling some crypto. Your stop losses are triggering. Everything's a feedback cycle, right? And it seems like the feedback cycle of selling leading to more selling is currently existing in crypto, but it's not existing at this point in the stock market because the flows haven't changed. From Scholastic Pi. An emerging application of blockchain is stock tokenization, where every stock transaction ownership is recorded in the blockchain and investors get direct voting rights rather than the transfer agent. Yeah, so I get it, but I don't see that as enough of an incentive to get people to sell their Apple stock to buy their Apple stock tokenization. And look, there are also, by the way, a lot of awesome, I think, real-world applications of blockchain that have little or nothing to do with cryptocurrency. And I don't want to get off topic here, but, you know, one of the things that's really irksome right now about everything that's going on in the government is basically both sides of the government accusing each other at this point of voter fraud. And I find that language to be extraordinarily dangerous for a whole variety of reasons. I'm not even going to get into it. And people argue about, like, should you be able to mail in your vote? Should you be able to do an absentee vote? Do you have to have voter ID? You know, how should it take place? All this stuff. I think that is like the awesomest use case for blockchain. Like why not have a voting system set up where everyone can just vote online and have blockchain act as the proof of the vote, the proof that you're able to vote, the proof that you didn't vote 3 times, and then we get rid of all that. For me, I think that's a phenomenal use case of blockchain. I have no idea how that use case would influence any cryptocurrency in any way at all, but you would immediately get rid of any of the voter fraud stuff, and you would probably get a significantly larger percentage of Americans to actually vote. So I think that's an awesome use case. But I think bottom line is there's a lot of use cases for blockchain that have nothing to do with the cryptocurrency going up or down. So, you know, whatever. But I appreciate the point there, Mr. Scholastic Pi in the YouTube. Thoughts on the CPI? I have no thoughts on the CPI. I thought that the U.S. government, the Trump administration today said that there are that we're probably not going to get any October numbers for inflation or jobs, which I think is very convenient because I think the October numbers are set to be terrible based on what we saw from ADP and based on what we see from Truflation. It looks like October, and it makes sense, by the way, guys, when you think about when the additional tariffs were added on and the lag effect from those tariffs, we should be seeing like a lot of the biggest impact from tariffs in terms of a growth slowdown and an inflation increase. And I don't know which is going to be stronger from those in this like October, November, December period. So isn't that convenient that we're potentially never going to get the October numbers based on what the Trump administration said today? So I don't know. It just it's annoying. You almost wonder what the alternate universe would have looked like for the stock market if we actually saw employment numbers and CPI numbers coming out. But you know, the inflation continues to not be as bad as I would have originally expected, because you are seeing goods inflation, but Bill K saying, I would assume they would share the numbers if they were good. Yeah, I totally agree. You're seeing goods inflation, but it's been offset a little bit by other aspects of things like rent, which hasn't gotten as bad. But I think that the reason that you haven't seen inflation get as bad as I otherwise would have thought is because the economy is slowing down, which again circles back to the same conversations that we were already having earlier about economic slowdown, wealth effect, stock market, who's actually still buying in this market, who's still buying goods, you know, the wealthy people, people with stock market exposure, etc. I didn't think there was a CPI tomorrow, but maybe somebody can confirm that. Someone in Formula One in the YouTube is wondering if there's a CPI tomorrow. I thought there was not, but does anyone here in the DTF know? I think the answer is not, right? Matthew in the VTF is asking me about Uami. Earnings release seems bearish on price. I don't. Do you have the numbers? I'd love to see them. Seems like it's trading down. I don't know. I think that a lot of these stocks do full reversals from where they came from. So if you're continuing to look bearish, target number 1 would be $6. There's some support there. Target number 2 would be $5 because it's a previous resistance level. But my biggest target would be 4 on Uami. No problem. For me, like, can you explain that again about having more access to assets towards the end of the year? Just trying to wrap my head around it. Yeah, it's something that Jem Carson talks about. I had posted the link like a week or so ago when Jem had done the podcast with Ben Kahn and Ben Kahn's partner. Ben Kahn is actually a trader on our team. He doesn't spend a ton of time in the VTF, but he's one of our traders. He's a really good guy. Oh, Eli, you met him. You met him in LA when I got everybody together. He was there. So I posted that in the VTF like a week or so ago, and it's like a collateral thing. Like the market being up more in value means that there's more potential collateral for people, and therefore more money in the system overall, and that gets basically front run. It's a mechanism. I'll be honest. I don't fully understand it outside of what I've heard him talk about, but I would push you back over to learning from Gem's stuff. A lot of it's really good, and I think he's been somewhat regularly on that Stock Twitch show that Ben Kahn does. Ben's a phenomenal trader. Actually, he's really, really good. Does really well on our team, but he's also kind of like a comedy dude. He thinks he's really funny. Sometimes he is. I'm good pals with him. We text all the time, so I don't think he's going to be upset if I'm half making fun of him. But anyway, worth checking out the stuff that he does. Yeah, he can be pretty funny at times. Yeah, I don't think we got a CPI tomorrow. Ryan giving us an interesting take on Bitcoin price action from Jordy Visser. I'll check that out. I got that lined up to read, and I've got this BMNR that T.G. Watkins shared earlier, this article about that, lined up to read at some point. All right, guys, 5 o'clock. I'll wrap it up. Looks like we got through all the questions and comments. Have a great night, everybody. I will see you all tomorrow.